All right. Hi, I'm Radical Liberation, self-declared king of the moon. I have with me the mad mercenary from Australia.
Hello there.
Okay. We thought we were going to be tomorrow, and then we decided to be today. Anyway, it's happening right now. So welcome. The one thing to mention is Mad Merc has been beavering away, creating merchandise, and we have opened our merchandise store. It's in the show description, but we'll give a little tour since it's our first time having it open. We'll give a little tour a little bit later. So look forward to that. I think Mad Merc's had some great fun with the design work here. So it's you got all the lessons from our critique with Pharaoh and Semiagog, right? And you took all those lessons to heart and made amazing designs, right?
Well, I tried to remember as much as I could, but I'm sure I can't go up against the masterful critique that obviously Semiagog and Pharaoh would give it. My designs don't hold up to bar.
we might not ask them on for that kind of critique.
Yeah, but let's
hopefully
not.
Hopefully you guys will enjoy. It's cool stuff. Okay, so let me go ahead and share, and we're going to get right to it. We've got a lot to cover, and this is meant to be Econ Minis, so I'm going to try to not spend all day on this stuff. Here we go. Let's make sure I'm sharing the right thing. No? Let me try again. Sorry, got the wrong window. Application windows. Oh, okay, there we go. Oh, little teaser. Okay, that's for later. All right. Okay, they changed the title on this story. Don't you always wonder when you look at the title of the story, or you remember that the title of the story was different, or you just maybe notice that the title that's on the web page looks different than the original title that you can see in the URL? Yeah, so here's the original title that caught our attention. UK banks given 6 months to prepare for negative interest rates. Here's the new title. Bank of England, rapid GDP rebound likely as vaccines take effect. Okay, maybe I'm understanding why they changed the title. Then in the subhead, it says, economists say lenders should still prepare for negative interest rates in case of downturn. So they've changed the spin on this article, but I think the substance is the same, and that's what we wanted to highlight. Bank of England expects a rapid rebound of the UK economy later this year as the vaccination program takes effect, but also announced moves to introduce negative interest rates if the recovery falters. Okay, well, I think this is the time when, right, Mad Merc, when we bring up revealed preference versus chin wagging, right?
100%.
The chin wagging is, everything's going to be great, guys. The actual action being taken is, everybody get ready for negative interest rates in a few months, please.
Yeah, everything is fine. Everything is fine. The house is burning down. We're doing negative interest rates. We've stimulated the economy to some end. It's still not getting active again. Everything is locked down, but everything is fine. We're going to have a great GDP growth. Build back better.
Right. Okay, so let's just make sure we cover the news here, and then we'll talk about it. What is the news that's actually kind of buried here now under the spin of the title and the way they did that first paragraph? What are they actually trying to tell us? They had forecast a slump, the Bank of England, followed by a resurgence of happiness, right? However, the central bank said it wanted high street lenders to prepare for negative rates by July. Okay, so that's several months out, in case there was a fresh downturn and its monetary policy committee needed to deploy them. Negative interest rates are something that are deployed, right? This is the reason I was struck by that language of deploy, is that in the market, in the free market, interest rates are something that are a result of the market process. It's an interplay between people who want to hold cash, people who want to hold cash, people who want to borrow money, people who want to loan money. And the interplay of all that supply and demand is how you get the interest rate. But in our wonderful modern, what is it they like to say? Thatcherite, brutal free market economy, heartless free market economy. Interest rates are not arrived at naturally and organically through the market process. They're deployed by the central bank. So unfortunately, that language is entirely correct to talk about the negative interest rate as something that would be deployed. Okay, quick inside baseball. Go ahead.
It's so just okay. If you think negative interest rates are, it's the natural process of going down the new Keynesian specifically line of thinking. Well, if you need a quick fix to the economy during a recession, you lower the interest rate and you dump a whole bunch of cash into the economy. And yes, new Keynesians, I know you guys think that fiscal policy should only be used as a last measure. I get it, but let's be real, the governments don't do that. Fiscal and monetary policy are used to stimulate the economy, and we lower interest rates, and then that gets us the temporary slump, which then brings us all up into a better position to where we can raise interest rates again and pay down the debt. That never happens. It never happens.
Right,
You're doing this by decree. These are not natural interest rates. And you have pushed, and you have pushed, and you have pushed. I remember in 2008 when the Reserve Bank of Australia was saying 3% interest rates were dire. And now we're preparing for negative interest rates in order to boost GDP. You are mad. You are crazy. This is insane. You can't keep doing this. Everyone's going to be addicted to negative interest rates then. And if you raise the interest rates even by 25 points, or 0.25 points, sorry, you're going to completely wipe out everyone with these negative, who have gotten used to these negative interest rates, because they can't afford to operate anymore. This is going to be disaster.
Right. Speaking of changing headlines, I realized that in my haste to my scramble to throw this together, I had put as the title of the show, UK goes below zero. That's not quite accurate. I just switched it to UK going below zero because this article, of course, is not about negative interest rates right this moment, but that they're anticipating possibly negative interest rates coming up in several months. One bit of inside baseball here when it talks about, what does it say? Yeah, it wants high street lenders to prepare for negative rates by July. Well, what does that mean to prepare for negative rates? Well, I can tell you one piece of what it means. Literally, some people are going to have to adjust their software because they wrote it assuming that interest rates would be positive. Imagine that, right? Decades ago, or who knows how long ago, somebody's writing software. They're not thinking about negative interest rates in their software. So literally, you try to do the negative interest rate and something crashes or it just doesn't work right. It doesn't show it as negative, So they're giving them time to update their software so that they can deal with negative interest rates in terms of their calculations, in terms of their display, etc. So go ahead, Medmer.
What is this antiquated notion, Radlib, that you should have a positive return on your investment? I mean, this is obviously the old neoclassical way of thinking about it, and we have evolved past this idea of actually earning a profit on your money. This is obviously, we need to do more government spending in order to bring us out of the ditch. We just need more people to get back to work and build the country back better.
We've moved beyond the those days of everybody expecting a return on their deposited money, and we have progressed, and there's no going back. Right? You can't rewind history. I think that's what they're always telling us, right?
That's it. I was listening to a podcast, the Human Action podcast. The episode's a bit old. It was about negative interest rates. That's from a year ago, and Murphy was on. Bob, is it Robert or Bob? I can never remember. The Austrian economist Murphy.
His name is Robert Murphy, but he goes by Bob.
Bob, okay. Bob Murphy was on, and he was basically talking about this is not only insane, but the reason that this is happening is because investors are not sure what is going to happen as well. So this is a everything is not equal. So in a normal circumstance, everything being equal, you would have, if you had negative interest rates, people would just pull their money out of the market and they would hold on to cash because they're not earning return on the interest rates, and the inflation is obviously going to hit their bottom line, but it's not going to be as bad as them losing profit on the interest rates. So people would just hold their cash. But everything isn't equal because we have now, as we can see with the Fed and the ECB and the Japanese yen, and the Indian currency, people are moving towards electronic currency. So they can't even hold cash anymore because everything is going to be digitized. You can't actually take it out of the bank. And so everything is not equal anymore. And so so the way Bob Murphy was describing it, basically, people are willing to take the loss at the moment of negative interest rates, a small percentage, grant you, in order to have the security that they will actually have the money tomorrow. Because if they
Right.
put it in a T bill or a T note, the government legally has to actually give them the money when the note or bill matures. Now they
Matures.
may
Yeah.
make a loss on it, but it's better than not having your money guaranteed at all and having it in the wind and you don't know what is going to happen to it. So
Right.
this is actually people willing to take losses because the environment is so insecure.
Right. Okay. So there's two resources. You've mentioned one. I've shared the link in the chat, and also you can see it on the screen right now. The Human Action Podcast with Jeff Deist, who's the president of the Mises Institute. And here he's in conversation with Bob Murphy, who I know, and everything about negative interest rates with Bob Murphy. Or we have our own humble offering on this topic, the War on Cash and Negative Interest Rates was our episode. Wow, actually not too far from when they did theirs. Theirs was in like September 2019 and ours was in December 2019. But anyway, we did our own coverage of negative interest rates and connected it specifically to this war on cash. Why is it that you may or may not know, they more and more restrict how much cash you can withdraw from your account. They'd like to get rid of cash altogether. Why is that? Well, I think if you understand about that, it helps you understand about negative interest rates. So we connected those two things.
The two are intrinsically linked.
Yes.
The two are intrinsically linked. If you have negative interest rates, there will be bank runs. People will try and take their money out in physical cash. Now, there isn't enough physical cash in the actual system to facilitate that, but let's not talk about that. So what they're trying to do is introduce cashless societies so bank runs cannot happen. That is the bottom line. They are trying to control you.
Right. Yeah. It's a power play, really, is what it comes down to. But watch our show and you can get the full story on that. Okay. Well, let's move on to story number 2. Ready? That's all I really wanted to say about that, just to say that it looks like they're heading towards negative interest rates, or being ready to do them, at least, in England, in the UK. Okay. Ready to move on, Madmer?
Let's go.
Okay. Next, we had to mention this one. Tesla buying $1.5 billion in Bitcoin says will soon accept them as payment. Okay, so I do think this is a really significant story. I don't think it's necessarily so much about the 1.5 billion in Bitcoin. I don't know what the total value. I should have looked that up. Do you know what the total value of Bitcoin, known total value of Bitcoin outstanding
I have
is?
no idea what the value is. I know when he bought it, the price of Bitcoin was something like 40K USD.
Total
So
supply of Bitcoins, total circulating Bitcoins. Okay, I'm finding a chart, but it's not, it's just showing me market capitalization, total USD value of Bitcoin in circulation. Okay, well, okay, 1.5 billion isn't negligible. It's saying that right now the value of Bitcoin is like 900 billion, I think, if I'm reading this chart right. Yeah, almost 900 billion right now. It's floating between 8 and 900 billion. So that's all of the Bitcoin everywhere. And Tesla just bought 1.5 billion out of that 8 to 900 billion. That's not trivial. I mean, if you bought 1/800th of all the gold in the world, that'd be a lot of gold, right? That would have an impact on the gold market. So that by itself is significant. But I think the bigger significance is that this makes people take Bitcoin once again more seriously, right? Each time they see Bitcoin being used as a medium of exchange, in this case to buy Teslas, it sounds like, then that makes people go, oh, I should, Bitcoin's a thing I might want. I could buy things with it. I could buy a Tesla with it, right? So that I think affects the perception of Bitcoin, and that therefore it's going to affect the market price, right? I think there's a chance it could have increased the supply. Let's go right to the chart and see if what we think about that. Now, this is a long chart. This is a year. So I don't think we're going to be able to focus in on, that news breaking, which was, date on this one is Feb 8th. Well, I do see a bit of a spike around 8th.
there's a massive spike. So there's a huge spike. This see where it was kind of flatlining at the beginning there. This was the base that Bitcoin was sitting at for quite a long time.
Right.
2010, I think there was a spike.
So this is in the $10,000-ish range, plus or minus a couple thousand. $10,000 per Bitcoin. Yeah.
Right. And then there was this was the rally we saw. You guys remember earlier we did the episode with the what the hell happened in 1971 guys, and this was the rally that we were talking about. And in that episode I mentioned, hey, maybe people can wait after this rally is done, because like previous rallies, the price had shot and then it had gone down very quickly, very steeply. And that's what looked like it was going to happen. You see, after that initially rally, the market becomes a bit more bear, and it starts to come down a bit. And then Tesla buys 1.5 billion and generates a whole heap of media around Bitcoin, and it shoots back up again.
Mm-hmm. Right. So we were at the 10,000 plus or minus a couple thousand range. It shot up to 40,000, dipped back down to like 32. And now most recent high I can find is like 46. So it not only reached the high that it was in early January, but it's exceeded it. So yeah. This
has been driven, and I believe we have the next story there about Mastercard. I think this might continue. This rally may continue.
Next story about Mastercard. I'm not sure I have that. I was going to share the rainbow chart.
Okay, well, we can do that.
So this is interesting.
I shared one about Mastercard there because I think what's going to happen with Mastercard is going to have another rally on the Bitcoin. It's becoming even more mainstream. So guys, if you need to get Bitcoin,
where is this link?
Yeah,
I might have missed it.
Throw it in Discord.
That'll work.
Anyway,
while we're working on that, take a look at the rainbow chart. What is the rainbow chart? Can you explain it? Mad Mary? Okay, I'll try to explain. Oh, there you are. So the rainbow chart,
you go ahead.
and it is
I'm again losing connection.
okay. This is behind a little bit, but not too much. So the rainbow chart is basically a fun way to show a logarithmic view. And I guess what is their point here? It says it's meant to be a fun way of looking at long-term price movements, disregarding the daily volatility noise. So the color bands follow a logarithmic regression, but are otherwise completely arbitrary and without any scientific basis. They said, in other words, it will only be correct until one day it isn't anymore. So it's pretty and it has colors, but also it shows that if you use this logarithmic scale, then the ups and downs of Bitcoin, as dramatic as they can seem in absolute numbers, are sort of staying within a band that, it doesn't really go. In other words, what you don't see is the price dropping way back to where it was 6 years ago. You will see this dramatic up and down, but that dramatic up and down is relative to kind of a new center, you might say, that is hovering around. It doesn't, people are like, oh, Bitcoin, it's the ups and downs, they're making me seasick. And if you own some, which courtesy of a generous viewer, Mad Merc and I do now, if you own some, it can make you feel pretty woozy. But the point, they're trying to give you some perspective and say, look, yes, it drops down, but it doesn't drop down to, $5 per Bitcoin, right? Which it actually, well, here, yeah, Bitcoin price on 2012, $5, right? Now let's take a recent low. Here's a shocking low from March of last year, $5,000 per Bitcoin. So yeah, by the way, Stone Toss has a really great comic on this. I think it's Stone Toss. There's a great comic strip where it shows them like so excited when it hits $10, and then they're like wanting to kill themselves when it's down to 1,000 later. So the point is to keep it in perspective. Yes, Bitcoin goes up and down quite a bit, but it doesn't go down to where it used to be, and the ups are not off this sort of silly rainbow chart that they came up with. Okay, so did you have a Mastercard story? Oh, there we go. Okay, I wonder if I had that. Sorry. Let's see. Here we go. Bitcoin hits record as Mastercard and BNY Mellon embrace crypto. Oh, this is February 20. Oh, wait. So what now? What is this story telling us, Madmer?
As far as I can tell, and I may be wrong, but as far as I can tell, Mastercard is going to be mainstreaming Bitcoin in payment. So Visa has, I'm sure everyone has seen the ads on YouTube come up before the videos, at least I have. Visa is launching their cryptocurrency card. I think it's like a debit card. So you can pay just in crypto, just as you would with any other currency. I think MasterCard is also getting in on that game. And so they're going to have cards and payment in crypto as well through their systems.
Right. Now, let's be careful here. I noticed in the article, you have to read carefully. MasterCard is going to do stable coins, which often peg their value to like the US dollar or something like that. So they are moving into crypto, but not Bitcoin specifically. Whereas Bank of New York Mellon says it will hold, transfer, and issue Bitcoin and other cryptocurrencies for institutional customers. But again, don't worry too much about the details. The reason this Bloomberg article makes sense, they talk about Bitcoin and then they end up talking about stablecoin or whatever. To some degree, consumer confidence has the cryptos kind of all in one place. That's unfortunate because, as we discussed on our Bitcoin episode, not all cryptos are created equal. So we're gonna see a loss in confidence in Bitcoin because some really bad crypto falls apart, right? That doesn't have any of the properties of Bitcoin. But anyway, ignore that for the moment. We're just trying to understand what's going on in the market. What's going on in the market is people are viewing all these cryptos sort of together. So MasterCard validates the whole space by accepting stablecoin. And then BNY Mellon, sure, it's only institutional investors or whatever that can, institutions that can actually do Bitcoin itself. But again, that validates the space, right? It makes people go, oh, okay, Bitcoin isn't just like geeks and nerds. It's, Mastercard and Mellon, Bank of New York Mellon, and serious people are Tesla. All of these things build confidence that it makes sense for me, the normal Joe, to have some Bitcoin, right? And that means people buy it, and the price goes up. Go ahead.
Right. This institutionalized acceptance could be again, Tesla, Mastercard, Visa could be the precipice for a new rally. So if you missed out on the first rally, like I did, if you missed out on the first rally, this could be another rally coming in the pipeline. Now, here's the risk. Now, everything in life has risks to it. The risk is because you have a bunch of institutionalized people coming into this space and may not actually understand that this is pretty bloody good money. And I mean money, not currency, money, as we went over with our 2 podcasts on Bitcoin, with the what the hell happened in 1971. People who know a lot about Bitcoin,
right?
They could be more prone to the fluctuation and their emotions. So a rally could be really, really good, but at the same time, a dip could be really, really not bad, dramatic. Because obviously dramatic. Exactly.
Yeah.
So it could become a lot more dramatic. But again, as we showed with the rainbow chart, in the long term, you're getting massive profits. So what do you care? So buy the dip and ride the high.
Yeah, right. Exactly. So final thing to share here is just, if we don't shill our own show, who will, So here's our second episode. We actually did a 2-parter. Episode 1 in this little series at the end of last year talked about money, and so we could sort of place Bitcoin in understanding what money is and what it isn't. And then in part 2 with Colin and Ben, we talked about Bitcoin itself, and that's what I'm sharing in the chat right now. If you are like, hey, maybe I should finally start paying attention to this Bitcoin stuff, we recommend our own coverage of it. I think we did a good job. Okay, let's talk about the merch store. We've got over 100 people with us now, Mad Merc, so I think it is time to shill ourselves. Go ahead.
One thing before we move to the merch store. This show is not financial advice. Any risk that you take in the market is by you. Okay? Just putting it out there. But if you do make a profit and you want to support the show, throw us a couple bucks on our wallets. We have the link in the description for the show wallet, and we really do appreciate it. But what we also appreciate, little segue here, is people buying the merch that I have just set up this week.
Okay,
did this take me a while.
We were throwing a little last bit of piece of this together right before going on air. So the Radical Liberation store on Spreadshirt.com, and we're featuring T-shirts in particular, right, Mad Merc? But like many of these stores, you can take the design and do a mug or whatever you want to do, right?
There are to give people some perspective, I have designed, edited, and colorized over, I want to say, 200 products.
Wow.
Yeah. If there is not something there that you like, you need to come talk to me on the Discord, because I do have a channel dedicated to what do you guys want to have in the merch store. And you guys can even submit your own designs, and if they're popular enough, I will put them on the merch store with some modifications, obviously if need be. So if you want to scroll down there.
So I've got the shirts here. Let's go through those. We've got all Radical Liberation logo with it's hard to see here, but a little bit of smoke coming off the L, where it's up on the chest or on the chest, the breast pocket, or just covering the chest. So 2 variations there. Then the so to speak with the bow tie, And then this is that great Soviet one, right? What does the word say again? Did we really win with the
Did we
shattered
really
Soviet?
win?
And then do they represent? That's the U.S. Congress shattered logo, right?
That's it. That's the. I
Yeah,
think
very,
that's the Congress
very
one. I
cool.
can't see it very well.
Yeah, we'll click into some of these. Oh, here's the RL logo, the red lib logo here, and you can see the little bit of smoke on the L, and many other products you can get. So hoodies and so on and so forth.
Right.
Awesome.
And if you like a hoodie and you think, oh, but I don't want it in that color, don't worry. You can customize the colors yourself. Just
Yeah.
all you have to do is click on that image. As you can see, for each design, one there, I got 104 products I did for that one. So to speak, has 113 products I did. So there's a lot of variety there. So, for example, if you want to go up to the RL logo,
Yeah.
yep. So if you just go down to the one that has 113 products or 114,
Click it.
whatever
You
it
want me
is,
to click in?
104. Yep. Go to the products, click the plus
Okay.
symbol. Yep. Okay. Scroll down.
Well, now there's colors and all that kind of stuff, right? Or do you just want to
Exactly.
show a bunch of the stuff that's set up already?
Just show. But I even got aprons in there. I got bags in there.
Yeah.
Yep. Again, we get this is
Stickers.
you get something from this. I have actually done a bit of work. You get pillows,
Yeah.
beanies, even got something for the little kids, a little
Baby bibs.
baby.
Bibs.
Yep. You keep going.
Mugs, backpack.
Mugs, of course, we got to get the mugs in there.
This is great. Women's, men's, babies, hats. And anyway, that's page one. We won't keep going.
All different styles and different genres, and I particularly like the look of the jumpers. I think the jumpers look very good. Again, the face mask. Yes, we do have a face mask in there. Don't worry.
Oh, is there?
If you really want to
I
wear,
didn't see
yeah,
that.
I did that for the idiots, but you know.
Okay, yeah. That's funny. I didn't see the face mask. Okay, excellent. Good work, Mad Mark. Really fun. And yeah, the apron, that's tempting. We always need more aprons around my house.
Exactly. And guys, I do have the Radical Liberation logo, but it filled in with black. For some reason, that is pending on review. I don't know why. But that will be on the store as well. So there are more designs coming. So,
wow,
go
crazy, amazing.
Something. There is going to be something there that you will like. These designs are sleek. They are. I chose this store. I did a ton of research. I went through about 40 different stores. I chose this store because of the quality of their products, the amount that they can handle, and where they're manufactured. They manufacture in Germany. They do not manufacture in China. They print high quality stuff that is very, very detailed because of the printing processes. They they have a wide range and the shop looks freaking great. So I did a lot of work on this. Please go buy some stuff.
I just had to make sure to put the did we really win up because I just love that design. So here's you can do t-shirts in various colors, right?
Yes.
You just pick your color, right?
One more thing. For the first 2 weeks,
Yes.
there is 15% off on the store.
That's right. Grand opening deal for everybody.
Exactly. 15% off in the store. Link is in the description. A body pillow.
Okay.
Go to hell. We're not doing a body pillow.
Body
Stop
pillow.
We're not doing that. That's degeneracy. Stop it.
No degeneracy in our shop. Okay. Let's move on to a couple other things. Here's a really quick one. I just wanted to mention this. I just watched it and I loved it, and it's of interest to our folks. So they did do a little documentary on Thomas Sowell called "Common Sense in a Senseless World." And Sowell, and I am. I learned things I never knew about Sowell. That he's really into photography, for example. and just about his life. I learned that he was born and raised up until he spent his childhood until he was 8 years old, about 45 minutes from where my mom was born. So anyway, it was really good, and also I think it could serve as a really nice introduction to Thomas Sowell, gentle introduction for those who don't know much about him. It just, he's kind of an inspiring person, in terms of his life and his character and his courage. So it's just a really, really great, and it's not long. It's 57 minutes, the whole thing. So recommended, and I shared that link in the chat. Now, here's something, little surprise. So this guy is named Mark Jeftovic, and the reason I know him is that he runs a company that I've been using for a couple decades. Namely, he runs my domain name server. It also, and I found this out more recently, it also turns out that he's a really based kind of free market guy, maybe stronger than that. Notice that his site here is the bomb thrower. And he sends out these newsletters, which I was getting because I'm part of his company. He takes care of radicalliberation.com for me, his company. I'm getting these newsletters. I'm like, wow, this is like really good. This is like Mises.org level stuff, So let me show you something. Hoping that I have it ready. It is only available as an email, and I actually asked his permission since he didn't have it up on his site, whether I could share it, and he said that's fine. So yeah, here we go. I think this should be right. Yeah. Okay, so this is his latest email where he talks about Elon Musk going into Bitcoin and gives his analysis of it. There's a couple things that are interesting about it that I wanted to share with you. First of all, I just wanted to introduce you to Mark Jeftovic. I think he's an interesting guy, interesting analysis. He's particularly good on like security, computer security issues, and privacy. Very much from the point of view of, kind of a libertarian point of view. He's on our side against the state. Let's put it that way. Here he does a little analysis of Bitcoin, but then he says he's going to be doing a newsletter soon. I think this will be like a subscription newsletter that you'd pay for, called The Crypto Capitalist. More on that in a moment. And he says that he thinks what's happening here with Bitcoin is another data point and the underlying thesis of the work he'll be doing in that letter. And here's the thesis. The thesis is the Great Reset is coming. And what does that mean? He says there will be a central bank sponsored digital cash. We were talking about this, right? That we are going to start getting stuff that they're going to sell as, it's basically like Bitcoin. It's just even better because it's got the central bank behind it. Of course, that means it's even worse, right? Which we know. But he says, what is this going to be, this digital cash, central bank sponsored digital cash? It'll be centrally dispensed and administered. It will be fully programmable by central authorities and will have other nifty features such as use it or lose it. You'll have to spend your digital STEMI, the stimulant money or whatever, the same month you get it or it'll be gone. This is the ultimate, right? This goes beyond negative interest rates. Just a time bomb on your money. Here, you can have this for 30 days, but we want you to pump this economy up. So don't sit on it. You've got to spend it or you lose it. Think about that. He says no savings. It'll either not be permitted at all, or if you try to store it, it'll get negative interest. So in other words, another move towards negative interest rates is what he's seeing. And then, of course, total information awareness and real-time taxation. Everything you spend your DigiCash on will be tracked, logged, taxed, sooner or later tied to some manner of China-style social credit. Anyway, so I hope you see why I wanted you to know about this guy, Mark Jeftovic. I have asked him if he'd be willing to be a guest on our show, and he said he would be. And I thought I would time it with when he has this Crypto Capitalist newsletter coming out. And so he could shill his new thing, which I think would be of great interest to this audience. And I would like you to meet Mark Jeftovic, who, I've just emailed with him over the years and read his stuff, and I just think he's great. It'll be a chance for me to meet him too. So I'm looking forward to that. All right, so that's what I wanted to share there. I don't know if I have a link. Well, okay, I guess I could share just the bomb thrower thing. And if you go there, you will see some of his writing. He's got some, yeah, you'll scroll down at bombthrower.com. Here's the link in the chat. And you will see some of his writing. And he's a good guy to, subscribe to. There's a free subscribe for now to this, and start getting emails from him, and you will be glad you did. He says reset proof investing and growing your business here in the new normal. So he's going to cover some topics like that, and he's a smart guy. So, okay, what's next? Physical event to which I am planning to go. I thought I'd mention it to you all, just in case you'd like to meet up with me there at the Mises Institute in Auburn, Alabama. Every year they have the Austrian Economics Research Conference. It's in March. I have got to make my hotel reservations like any moment now, any day now, or I'm going to miss out on the early bird pricing. This is directed by Joseph Salerno, who is super sharp, Austrian economist, and this is where people are presenting their papers. I have presented a paper here in the years ago, in the past. So this is, grad students, professors, things like that. This is a more serious, upper level thing. Having said that, they will let you come, but they don't let you ask questions. If you're not presenting a paper, basically, they don't let you ask questions during the sessions or something like that, because they don't want the academics to be overwhelmed by those of us who are just sort of fans of Austrian economics, right? They want to make sure it's a serious academic conference. Having said that, it is a great experience. Let me give you an example to go to a conference like this. I brought my wife, I think, to one of these academic conferences at the Mises Institute, if I remember correctly. Yeah, I'm quite sure. She'd read Road to Serfdom, as we talked about on a recent stream. But, she didn't know all the stuff about economics that I know. And she got so much out of the conference. She totally understood what they were talking about. She was not lost, because the great thing about Austrian economists is you can usually understand what they're saying. She was not lost. She was totally engaged. I remember her walking up after one of the lectures, Jim Ostrowski, I remember who it was, walking up and talking to him animatedly. I mean, my point is, don't be intimidated. Yes, it's a serious academic conference. That's the purpose of it. But if you're willing to come and just listen and absorb and learn, you will learn a lot. You will have a great time. Obviously, these are our people, great people to be around. Lou Rockwell, I would expect, would be there. Jeff Dice, president of the Mises Institute. Tho Bishop, friend of AA's. All kinds of fun people should be there, presenting papers or just in attendance. So hope to see you there if you're going. So let's cover one more thing. Oh, I should share the link. Here's that. Oh yeah, it says Feb 12th. I'll have to retcon our date on the show, Medmer. Okay, next one. How about you talk about this while I change the date? What's this story?
Okay, this one is about oil. Let me just give a basic rundown. Oil is required for basically everything in this world. If you don't know that, congratulations, you now know that. Plastics, paints, to run your car, to make the steel, to make electricity, everything runs off oil. Because of coronavirus and because of the lack of output, let's say, we had a little incident at the beginning of the year where we had negative oil prices, and we talked about this. I think everyone was a little bit shocked that it went there, but okay. And now the oil industry is starting to recover, and now they're going to be hit with this. IEA reduces oil demand forecast for 2021. Now, what does this mean? Well, when you have a recession, the demand for oil, energy, to do productivity, all these sorts of things goes down. Reason being is that, well, people aren't making stuff, so they don't need the oil. Again, this is what happened with the negative oil prices in a very extreme sense. Now, if oil demand is forecast to reduce in 2021, again, what is going to happen with the oil industry? Now, this is not even forecasting a potential serious recession that could happen if the interest rates become negative and people have a run on the bank. I believe I saw in the comments before that in Norway, they don't have $100 in physical cash to give to the entire population, as in per person. So this is becoming very severe. And if, let's be fair, the Keynesian or neo-Keynesian policies that the ECB, the Fed, the RBA, the Chinese central bank are introducing don't work, and they may not, we could see a significant impact on the demand for oil, the price of oil. Again, there are experts in this field who could talk about this a lot more, but this is just an article I saw flash by just before the show went live, so I thought I'll share it just to keep everyone, at least it's on their radar. If anyone's an expert in the energy industry, we'd love to have you on. But yeah.
Right. Yeah. Boy, they really talk about these vaccines, don't they?
Yeah, they
There's
do.
early optimism the vaccines would be an immediate game changer. But meanwhile, oil demand is dropping like a rock. Yeah. So, okay.
The hope is that the vaccine.
It's look past the spin and look at what the actual actions that are happening, right? In this case,
Yeah.
The demand for oil. See what's really happening with the demand for oil is maybe a stronger way to understand what's going on than happy talk from a talking head, right?
Yeah.
Okay. Well,
this doesn't even take into account other energy. We are going to do an episode on energy in the future. Don't worry, guys. I'm trying to line it up with a couple people who are experts in the field. Just give us a second. We'll get it going. We have a few other things planned first, but we will get it going.
Okay, we're just going to wrap it up with a quick glance at the central banks, and then we'll do super chats and be wrapped up, because it is meant to be the Econ mini show. How long have we been going here?
About 50 minutes.
50, yeah, that's fine. Okay, so, all right, starting with the United States Federal Reserve, of course, the central bank here. This one's a little bit longer, but each of these charts, bear in mind, is about a 10-year view. This one's a little bit more than 10 years. But notice, let's see, when does it start jumping up there? That's February. So about a year ago, you see it goes vertical climb. And then It's a little bit less dramatic lately. But again, we're seeing up instead of down on the balance sheet of the Federal Reserve. So what does that mean, Mad Mark?
We're continuing in this direction of trying to stimulate the economy, and we're trying to pump as much money into the market as possible, which is driving up assets. While probably when the inflation hits eventually, because as everyone knows, inflation is a relationship between the money that's printed and the velocity of money. When the velocity of money starts to pick up, the theory is that the central bank will not be able to retrieve the money out of the system as it has before. Therefore, we will have large inflation. Whether this does or doesn't happen is obviously up for heavy debate. But we are heading still in the direction that the Keynesians would like, which is to boost the market by trying to lower interest rates and push money into the system. And as we can see with the balance sheet, more money is indeed being pushed into the system in recent days.
Right, and then just real quickly, here's Australia, the picture in Australia. Again,
Yes.
It's not going to give me the exact date, but yeah, 2020, early 2020, we see the spike up, and then it's even more dramatic since then. It seems to me a little hard to compare, but right.
The amount is smaller, most
Yeah,
definitely smaller, but the
right,
trend is still the same, and the line is steeper.
right. And then in the United Kingdom, very similar story. Oh, and this is very much matching. It's like the 13-year
Yes.
on this or whatever, and again, early 2020, and it just keeps going up.
Yeah,
So we're not seeing
and just to be clear, just to be clear,
pulling back from this approach.
just to be clear, inflation. We could probably talk about this when we do a show specifically on inflation, but inflation hurts the person who receives the currency last. This is what we call the Cantillon effect.
Right.
Whoever receives the money first, the currency first, gets the benefit of it because it hasn't been distributed throughout the economy. So, in our case here, especially in the modern context, it's financial institutions and banks that receive the benefit of this newly injected currency first, whereas Main Street, which received it last, feels the detriment of it because it's already been circulated through the economy, and this hurts the average worker, the mom and pop shop down the street, especially low income earners like kangaroids and miners and just working class jobs. That hurts them the most, especially the kangaroids.
What'd you say? Kangaroo? What?
Don't worry about it. Just keep going.
Okay, so I think that's all on that. Let's go to.
For those who don't get that, it's an inside joke.
Okay, let's go to super chats. We just have a couple. Mickey says, when Weimar Republic was such a success that we will try to get Weimar Republic 2. I'm so looking forward to gang wars on the streets and giant strikes. Right. Yeah. I mean, it sounds like. Can you figure out what he's connecting this to? I mean, he's
when Weimar Republic was such a success.
This was earlier, so I'm not sure what the context was.
Is he talking about the United States and talking about Doomer Civil War collapse? There is not an unlikely chance. There is a not a likely chance. There is a percentage of that the future timeline may include violence, but we are not advocating it, and we do not want it. And all we want is peace and love and harmony, and to actually live in good stead.
Oh, okay, I see. He says he's giving us more context. It's a sarcastic jab at hyperinflation due to negative interest rates.
Oh, okay.
Right. Yeah, because what we saw in the Weimar Republic it was really the after effects, right, of the hyperinflation after World War I. The central banks seem to think they've got all this under control with the crazy stuff they're doing. What we just saw, those charts, and also now moving towards negative interest rates more and more. But if they lose control, we all suffer, right? Okay.
Yeah. And just to be, I actually have a little anecdote about this. I'm trying to find a video right now that Tick, Austrian historian, did, and he made a very good point in the latest video he did. I'm trying to find it. Keynes was such an idiot that, and this is, again, if you don't know, Keynes is the person that we take all of modern economics from, and primarily the new Keynesians at this neo-Keynesians at this point. He thought that right before the hyperinflation in Germany, that the German mark was a really good thing to invest in, and so he put a lot of money into the German mark, and then, as we know, the German mark lost a ton of value due to hyperinflation, and he lost about 75% of his wealth, his total wealth, not just his investment, his total wealth, and he pulled out just before the the Great Depression, and the Keynesians count this as a win because Keynes didn't lose any money in the Great Depression. Well, no, he didn't lose any money in the Great Depression. He lost it because due to hyperinflation because he invested in the German mark right before hyperinflation, and
Wow.
and because he thought due to his economics, he well he lost out because his economics were just that bad.
Mr. Spoon says Tick is not an Austrian historian. He's a World War II buff who knows a bit about free market economics.
I
Sure.
don't think you've watched his. I don't think you've watched his latest videos then, because he's really improved on his economics game.
Oh,
Still
you're
not
saying
quite there, but
he knows more than a bit at this point, is what you're saying.
he used to be very shaky on it. He used to be very shaky on it, but in the recent years, he's actually really improved on that.
Wow, cool. Okay, let's go to the next one from FiWise. I don't know how.
Yes, let me get that link.
This rainbow chart sounds like it deserves Enan Talib's Procrustean bad model criticism. Are you too familiar with his work? I'm a little bit. I haven't. I actually have one of his books I've been meaning to read. The Procrustean bad model. I kind of get the general idea, and I think even on the rainbow chart page itself, it says, "Hey, this is just a bit of fun. It holds until it doesn't. So don't take it too seriously." You know. What I did find it useful for, though, was just putting the ups and downs of Bitcoin a little bit in perspective. That seemed like a useful aspect of that chart. But yes, it's don't invest based on the rainbow chart. I'm sure the rainbow chart makers would be the first to tell you that.
Past performance does not mean future performance. It's
Exactly.
not indicative of future performance. Any risk you take is on you. All right. Don't come back to this channel. But if you profit, I mean, yeah, throw us a couple bucks.
Okay, and then finally, Mickey says, "Nice merch store. Even more things I can shill." Yes. In fact, I've been mentioning it, but I'll just mention yet another milestone, due in part a little bit to my wife, because she's had 2 streams now on the channel that have been well received. But mostly, and I have analytics. I can see all this stuff. I can see why when, and sometimes even why we're getting boosts in subscribers. The channel has gone since the beginning of the year from under 3,000 subscribers to over 4,000 subscribers. In my tweet, I said 25% growth. That's wrong. It's 33% growth plus, right? To add 1,000 onto 3,000. Anyway, so 1/3 growth from where we were. And that is it's mostly thanks to Mickey doing super chats, promoting the channel or the show on Tim Pool and a Sargon stream, I think. Anyway, he's having fun doing a creative guerrilla marketing thing, and we're getting benefit from it. So thanks again, Mickey. It's great fun. Okay, I think we're gonna stop.
There's one more question in chat.
Okay.
One more. Muscovy Duck, I think that is.
All right.
He's basically asking about do people like Keynes? Yes, if you could just read that out. Again,
when you say people like Keynes ended up enabling states to be able to print endless money for World Wars I and II in some sort of way, I don't know how much influence he would have had on World War I, but I don't know. I think really what happened is things were going a certain direction anyway, and Keynes just provided something that sounded like a smart justification for what they wanted to do anyway. I don't know that in the absence of Keynes, governments would have acted dramatically differently. I mean, states tend to be in revolt against real economics because real economics tells them that their ideas are causing harm, and they want to believe that the things they're doing, which are really just to benefit them, are somehow for the greater good or something. And economics says, no, it isn't. So they tend to want to ignore real economics and go with Keynes, who admittedly his intention was to resurrect economists, economic ideas that had been considered crank economic ideas for some time by economists. And he said, no,
Right.
I'm going to show you how really they're right. And he was wrong. They were crank economics, and Keynesianism is in essence what I would call crank economics.
Right. And this is certainly Keynesians and neo-Keynesians would definitely say, no, we don't just want endless money printing. In the good times, you need to have high taxation to pay off the debt that you accumulated during the bad times that you use to stimulate the economy. So in theory, no, they're not just for endless printing, and they view taxation as a way to remove money from the economy that's overstimulated. But in practicality, yes, they are. And the reason being is that what government in their right mind ever actually wants to stop a rally? What government in their right mind ever wants to actually stop a bull market? I mean, it's good for their votes. And so the Keynesians, in effect, even if they didn't mean to, and I'm being incredibly generous here, because I think we could really attribute malice to a lot of this sort of stuff. But
yes,
even if you're just stupid, why would you give the government that power? I mean, they're not going to follow it.
yeah.
You've laid out a theory for them that gives them the justification to print money, while also not giving them any sort of restraint, any sort of incentive for restraint. I mean, this is one of the reasons that, as much as I love him, Peter Hitchens is wrong on this point. He wants this conservative government with fiscal conservatism, but then he says, well, this is why we need to be Keynesians. Well, Keynes doesn't even justify that in practicality.
Okay, I realize there is one last thing to mention, which is that, mention the merch store. Once again, it's in the show description. Please take a look at what Mad Merc's come up with. It's great fun. And then I am not saying I'm going to pull this off every time, but one of my stretch goals for this year is that in time for the Econ mini show, we have already figured out what our big topic will be the following week for the Deep Lore Econ chat. And so there's a paper that I often am saying, boy, you should read this. You should read this. Then you'll realize that the Chicago school is just terrible. Well, I realized I've got a show now. I can talk about the things I think are important. So I want to go like full, because it's going to be a little bit of theoretical, almost philosophical, really, kind of discussion. I want to go like full, like Steve Turley, Tim Pool on the title, and do something like Aristotle smashes Chicago school or something like that with, all cap smashes. I'm not practiced in writing the Steve Turley, Tim Pool style YouTube title, but we'll have to work on it. We'll workshop it. But anyway, I think you'll find it quite interesting if you've wondered, as you might have picked up, if you've learned about any of this at all. If you've wondered, Austrians in Chicago school, I mean, they basically agree about free markets and stuff, right? Like, what's the big difference? Why is there seems to be tension, right? Well, I think you're going to really get it this next time. For people who are serious about economic science, the Chicago school is a stench into our nostrils. But I want to explain this in a very intellectual way, a philosophical way next
spoiler
week.
for that episode. Spoiler for that episode. If you want to get a head start, look up the terms empiricism and a priori.
Yes, but it's going to be even deeper than that.
It is.
Yes. Yeah, it's going to be good. Okay. Anyway.
It's a tease.
That's right. Okay, so look forward to a longer show next week, and thanks everybody for joining with our schedule switching around and everything. But it seems like lots of people found their way to the stream after all. So thanks so much, and talk to you all next week. Bye.
See you, everyone.